Hello, everyone. This is Own Wall Street with the TradersPerspective.com doing my weekend analysis. Before you, you have crude oil on the daily time frame. This week's been a little bit of a roller coaster ride. I knew that earlier in my Wednesday evening analysis, I had called for oil to maybe test the high like 52.44 level, possible extension to 53. We did not even make it that far. 52 proved to be the hurdle. Didn't even make it to this trend line directly. So that was a little bit off, but we still ended up seeing relatively, what was close as far as my forecast or not. 52.44 was just a few ticks higher, but in either case, the overall pattern was expected. So we did end up dropping down lower, and then we ended up seeing a little bit of a bounce here at around the 48.25 level. So this week, I'd be looking for a kind of a range bound trading because it seems oil might actually be falling in line with some kind of a overall average price. So what I'm saying is I think that oil is probably going to be trading between 45 and around 51 over the coming months. It just seems like we did have a little bit of a rally off these lows, and then the OPEC news wasn't as great as expected, but the market is realizing that it is trying to stabilize the price and the amount of inventory out there. So you can see here by this candlestick that we are now in the midst of a lot of confluence. We have the 200 period simple moving average here. Um, and we do have the 50 period simple moving average here as well. So, and I do have a bullish moving average cross here. So, I do expect price will kind of just shimmy between these two locations here, between about 49.80 or so, and then anywhere down to about the 48.90 level. So from 48.80, 48.90, let's call it, up to about 49. 85 or so. So that's what I'd be looking for is a little bit of a chops here. I'll drop down to the lower time frame to give you a better perspective. All right, and here's the 4-hour time frame, and you can see that we did have a nice sell-off, very healthy. My moving averages were crossing here, so I could see here that now we are above my moving average, however, still not having a buy, and this moving average does act as a resistance, as well as the 200 period simple moving average here and the 50 period denoted by the black line here. So we are in an area of confluence. We definitely have some resistance here at around 49.87, and I do expect that price will kind of come back down about 49 or so, and then we'll see some kind of a bounce. It is possible we may even come down a little bit lower, but I don't think it'll last too long. But I think that our new range is going to be between like 48 and about $50 on the price of an average barrel of oil. So, long story short, I'm expecting a little bit of a sell-off here, and then we'll bounce off of these levels and then try for higher. It's a matter of how much the inventory gets come out this week. Overall, I think that we have a at least a sideways to an upwards bias at this point. The reason why I say overall is because this is the weekly trend line here, and although we've had some crazy moves overall on the grand scheme of things, let me just go ahead and delete some more of these lines for you. Okay, and as you can see here on the weekly chart, um, we have rallied substantially from the lows that were put in last year. So we've rallied from here, and we've been chopping along, and now we're kind of back into this corridor here, but managed to get back in this level here. So we closed just under it, but again, I could be wrong, but right now we did, in fact, as far as a bullish case is concerned, we did in fact close over this 50 period simple moving average here, denoted by the black line. As you can see, after I zoom in, that we did close above this 50 period simple moving average. We did drop below a couple weeks back, and then we managed to break back above into this area. So realistically, like I said, we'll be looking at 48, 43 as the must hold level for now. Definitely have to close this week above this 50 period simple moving average if the bulls are going to maintain any type of momentum here. But in the grand scheme of things, like I said, I mean, we are underneath my moving average here and the above the 50 period simple moving average, which is a good thing. So even though we have this downward trend, I do believe that, if the bulls can maintain like a sideways fashion and just be able to maintain this area here, then maybe we'll be able to swing up higher. But that's going to be in the future, probably several weeks out at this point. But I do see that if oil can maintain this area and then break above this downtrend line here, then we'll be able to test that 55 mark in the future. But as far as things are concerned for this week, I would like to see a little bit of sideways action. In general, I do believe that oil is starting to show, a little bit of signs of stability here around this area here. So again, we may just kind of drift lower, toy with this 49.80 level, and also test this support level. And if 48.14, 48.30 can hold, then we'll be talking about some more bullishness. And then the fact that we have, at that time we'll have the 50 period crossing back above the 200, if that is going to be the case. So in general, look for this 48.14 level to hold on the daily time frame. If you're looking down on the 4-hour time frame, then you'd want to see around 49.18 or so to hold. But in either case, you could look to the left and identify that 49 would definitely be a solid area as well. So maybe ease your way in. But in the meantime, I wouldn't think that we go straight up. So we're playing with 49.87. We're also in the midst of the 50 period and also just slightly above the 200 here. So a lot of confluence. Definitely going to be some chop, but I do believe heading into the end of the week, next week, we'll see higher oil prices. This is Own Wall Street with the TradersPerspective.com. Thank you so much for watching.